Hey, good afternoon, everyone. Welcome to uLaw CPD webinar. Topic for today's session is Disbursement Demystified. Sorry about a couple of minutes delay here. We're just still trying to figure out the audio issue. I'm not able to connect through the phone audio. It'll be nice if you can let me know in the chat. You're able to hear me, and if I'm loud and clear enough, so I can quickly get started. This session is available for 1 hour of professionals and CPD credits. There's a new topic. It's pretty nice to kickstart this year with, um, you know, in session for this year. We've not had much this month, but we are having more new topics lining up for the next month. And we have 2 new CPDs availed, and we would have that coming up in the next month. So you can, probably sign up once the email comes in. Yeah, thank you. I can see that many of you. Okay, audio is bit uneven. Okay, I'm so sorry, but I am only left with the computer audio option. Let me still try. Let me know if it is any better, if I'm able to change the settings a bit here. Is it any better now? Please do let me know in the chat. Okay, awesome. Thank you. I think I'll quickly get started as people are joining in. Once again, repeating the topic for today's session is Disbursements Demystified. And it is a super core topic for accounting and financial management when it comes to maintaining both trust and general accounting alongside with compliances for various law societies across Canada. Disbursements, first of all, to understand what does disbursement mean in basic layman's terms. Disbursements, something that you have incurred on behalf of your client and like an expense that you've incurred on behalf of your client and that is getting reimbursed by them. And for which, again, you have to record in your books of accounts the balances that you have spent, the reason, and to basically maintain proper books, proper accounts, and obviously to raise an invoice and recover the expense so that you could record and report at the same time to your books of accounts. The disbursement is the act of paying out or disbursing your money on behalf of your client to make any expenses in relation to the matter specific and claim that from your client. What are the key steps when it comes to disbursements? Keeping in mind, disbursements can be made from both trust and general. Trust specific to matter, and that is something not with a profit motive. So when you are using trust, you just have to be a tiny bit careful or a little bit more extra careful than using your general. But it is not something that is rocket science for you to be not using trust accounts. Sometimes I tell people that trust is absolutely usable. The only thing that you need to keep in mind is not to um, use it for profit motive. Like, for example, uh, let's say you're charging your client for a court fee or a filing fee. These are fees where you don't generally charge more than what was incurred. So it is known as the actuals. So when you charge an actual amount to your client as a disbursement, it is very well known that it can be done directly from trust if there are funds sitting in trust for that particular client. So please do not hesitate or avoid using trust account. If you're comfortable charging your client for the same amount, and just one thing to keep in mind is that you don't use trust amount obviously to print paper or to uh, for any admin related work, but you do, of course, use it for actuals. Mostly I've seen, or it is understood that we use trust for fees and other actuals, not something that is, uh, something with a profit margin. So if you're looking to do that, you could use general account to charge your client a different amount from what you're reporting in your books of accounts. Let's say you're reporting $100 in your books of accounts, but you're charging your client $200. You should be using your general account for this type of disbursement, which is mostly, if you see, would be, like um, an admin related bank charges or printing paper charges or any of, let's say, a translator fee or anything else that is consisting of a margin, a profit margin. So keeping that in mind, record these disbursements as and when they are paid, and use the bank account that was paid and the reason, note the reason for the expense. So mostly if you get to see, these are expenses mostly in relation to your matter. Let's say, for example, you need to do a court filing fee or a process server fee for a family law or any of that sort. You can use the trust account if there are some funds sitting in trust, and then you can eventually raise a bill and get the remaining funds out of your uh, general account or get it into your general account directly too. So if paid from general account, then it's cool because you get a portion of the money into general account, so there is no action needed there. But let's say, for instance, if you're paying it out of your pocket, then there's an additional step of transferring funds from general to your personal account. So if there are funds sitting in trust, there would be actually, uh, let's say there are funds sitting in trust and you have spent it from your own pocket, then you have to move the money from trust to the general, then general to your pocket. However, if you've directly done from trust, then you have very, very minimal bookkeeping to be done here. All that you have to keep in mind is just that you don't do any transaction or you don't record any transaction with profit from trust account. But everything else is good to be done from trust account. Actuals only allowed, but the hassle of bookkeeping or accounting or data entry itself is very minimal when it's done straight from the trust. Board fee or other kinds of fees are super easy when it's paid from the trust account. As it is, you don't have to recover the expenses. Nothing about if there's enough money lying in trust. There's nothing about bringing money back into the trust or into get it into your general accounts. But of course, if there's enough money, then you just move them from trust to the general and pay yourself, or directly paid from the trust. So there are only two types if there's money sitting in the trust account. If there's money sitting, if there's no money sitting in the trust, let's say you don't have a trust account, then you can, as it is, get the money into the general account by raising an invoice once the work or the payments are done. But printing costs. Printing is normally done from general. Like I said, printing, bank charges. These are any admin related stuff. These are mostly done from general because, um, you know, either they would carry a profit margin or, there not be a real price. So mostly I've seen people do it from the general account. And the option is that you can charge your client a different amount. And you can record or report your expense accordingly. So any court fee, any other kind of fee are easier if paid from trust. And obviously, when paid from trust, you don't have the problem of recovering the expenses. And you can just show it as an expense straight out of the trust. Whereas on the other hand, when you're doing it out of the general, like a printing cost or an admin cost or a general, uh, general admin or any other related expense to the matter, recording them from the general account with appropriate information and raising an invoice and getting the money from either trust to the general or collecting the money directly into the general once the invoice is raised. Any questions so far? On the other hand, what are these types of disbursements? Now, disbursements definitely varies from every area of practice, every office to every person, based on whether they have, billables or actuals, mileages, unit rates, travels. Unit rates mostly used for photocopies, mileages for travel, kilometers, and unit rates, like I said, photocopies, printing stuff, billables for um, you know, any other resources that was hired outside, outsourced, etc. Billables do consider fees and filing fee, court fee, etc. So please do make sure that you can remember where both trust and general. If it's billable with actuals, any recovery of expenses on actuals, any other outsourced consultancy with actuals, all of these, yes, all of these have both the option of using both trust and general. Now, on the other hand, when you see unit rate, mileage, travel time, recovery of expense with profit margin, you use only general account. So it's easy to remember the word saying profit margin. You know that you can use only general account and not the trust at that time. Now, the benefits of using the practice management software is definitely about data entry, bookkeeping, reports, and ledgers, journals that includes all of these. During audits, obviously, these auditors are more keen on understanding the details that was entered. And that definitely includes the details of particulars, such as the details of the transactions, which is they added in the particulars, such as uh, whether it was a fee, whether it was a payment, whether it was a retainer of that sort. Now we have these ledgers that also shows the transaction dates, the invoice numbers, whether it's taxable or non-taxable, and all of that sort, which will include the payments details too. So once you start adding the details into the respective transaction in the screen where it shows you the date, the amount, the particulars, uh, even the method of payment, the reference numbers, the bank that you're choosing it out of from, and where the funds were received from. So much within less than a minute, and you hit apply. That is the detail that gets transformed into the client's trust ledger or the general ledger or even the journals for that reason. So journals are more drilled down version of ledger, but mostly you'll find all of the details in it. Alongside with that, we have the disbursement and fee book shown in a separate column as disbursements build. And this will help to figure out the portion of disbursement within that particular invoice with the invoice number and other things. Now, having said all of this, uh, I'm sure many of you had the habit of raising invoices and collecting payments. Now, some of us add legal fee along with disbursements as a flat fee and raise an invoice. I'd like to mention a few things as the do's and don'ts and recommendations as to why we should not be doing that. Because let's say when you're raising an invoice for a legal fee, as well as disbursements put together, it does not segregate the revenue, does not segregate the taxes, it does not show the real revenue picture, right? So, however, when you show disbursement as disbursements and legal fee as legal fee, disbursements are shown in your balance sheet as recovery of expenses. So it's easier for you to compare and see what was the actual revenue and helps you to do better. Um, I'm just going to take a minute to see if you have any questions. And I'm going to start sharing our screen for our uLaw account. But in the meantime, to understand very basics point of using a software is to make sure that you're able to segregate the legal fee from the disbursement portion and show correctly, as in, like, show appropriately which one is part of the legal fee and otherwise. Our law society does mention that you will need to maintain the books, and in order to maintain these books with the right balance, you will obviously have to record the payments, record the retainers as and when you receive, add them one by one. Once you add them into the dockets and disbursements, you will then be able to raise an invoice and collect the payment or transfer the money from trust to the general. No questions. I'd like to proceed with our showcasing our uLaw practice. But please do let me know if you have any questions. Currently, all of you are viewing my dashboard from the practice account. So the ones who are using uLaw for a while, I'm sure you know now we have a new dashboard as well, something called as Insight Dashboard. Please do take a look at it, including for disbursements, billables, total invoices. This is a great place for you to come and take a look at it and understand the numbers here. If it makes sense to you, if you have any questions, do reach out to us at support@ulawpractice.com. You get down here, you'll be able to see all of the details, including receivables, invoice balances, trust balances. You should be able to also go get into the details right from here. It also shows you a little overview of expenses month-wise. This is definitely helpful for people who don't have enough time to go over each and every section and download the reports. But for someone who has very minimal time and would like to know where they stand, this is brilliant. Please take a look at it when you get a time. But To get started off, this is something useful. So please take a look when you find some time. Thank you. Just want to switch back to the regular dashboard and let's see what matters. Like I can take any of the matters. Sorry, I think I need to sign back in one of these, but I can take it. I'm probably going to sign back in or create a brand new client. Excuse me. Let's say I'm creating a basic file and I'm adding a few details here with the event title. Now, most of the people miss out on this point that I mentioned a bit earlier, saying that, um, you know, let's say if they're in a rush to raise an invoice to the client, just for that purpose, legal fee, they could, obviously in the description they would say hearing and other things, right? And then they would say filing fee, 200 here. And then they would go here instead of just 1,000 plus taxes, they would do a flat rate of 1,200 plus taxes. So they would just include it over here. Now, this is where they mess up the accounts, and obviously the program doesn't bifurcate the details of legal fee and the disbursements. So for someone who does it, please make sure to add in the legal fee as a separate amount and or the transaction while you have. So you just have to add it. Whether it's a billable time or a flat rate, always make sure to have them separate. You just say hearing, drafting, and then the 200 based on whether you have money sitting in trust or not. You just go into the disbursements retailer. First of all, let's say you have a 500 retailer. disbursed and trust is the method of payment. It's easier for you to be able to do the actions with print checks. Go back in out in the trust, but you also have a disbursement made out of children. So for the very same matter, you have a disbursement, let's say admin fee or something. You're charging your client $200 plus taxes. However, you got charged 100 plus taxes. Save it. So very few things that make sure that comes into the disbursements tab. The admin fee and other retainer details gets into the trust ledger, making sure that you are covering all of these details within the same matter and raising a disbursement journal or a general ledger or a fee book or one of these items will showcase you all the details later. Yeah, so you just show the extra on, or let's say we use the word margin. So you just show the additional amount that you charged on the top, the margin, that is the profit. And the bottom is exactly what you got charged. So that's how it works. So let's say the admin fee, you're charging your client 200, whereas you still incurred $100 plus taxes, let's say from your bank or something. So then you would accordingly add it in. So the extra charge for printing would be recorded here as well. Yeah, you'd be recording if you want to invoice your client, obviously. Like let's say, for example, printing. Now you could do this way. You could choose add new disbursements paid from general cash other accounts, or you can use pay disbursements from general if it's actuals, or if it's unit rate, you could do this way. Let's say printing cost or something. Say you had about 40 pages to print, and each page was $1 plus taxes. While you record your expense amount. If let's say you didn't incur any expense, remove this particular box and then there's nothing recorded, right? But let's say you have something incurred. Let's say you used $20 to report as an expense, right? Right, 20 plus taxes, $22.60. Because let's say you printed using at the UPS store or the library or something like that, and then you used your debit card. If you have the reference number, great. But all of these, I'm going to show you as the reports towards the end as to how they get transformed into into these particular reports. As the data entry that is made, I'm going to showcase as to how it gets transformed into the reports. Yeah, so disallowed expense. Nice question, Tom. Thank you so much for asking. I was getting to it in the next time. Sorry, just give me 1 minute. I'm going to get to that disbursement disallowed expense box. Uh, in the meantime, I just want to show one more thing. While I'm in this case, like this particular transaction or page, you do see like this. There are multiple options. There is one for billable. There's, let's say, billable. Mostly people use saying, you know, um, for example, they could say professional fees or something. Right? Let's say you had hired or you had some external outsourced, or you do of course have an outsourced consultancy, but let's say this is an actual amount that is paid, then you can use this very particular tab. Mileages, yes, you know that again with the travel and mileage and unit rates we just saw. So this is basically going to allow you to maintain your books with utmost accuracy because you know it goes into the respective ledgers, journals, and it's going to help you to understand where these amounts goes and sits. So that very specific data entry leads to very specific and very clean reports. On the other hand, we also have miscellaneous expense from general. Now, the difference between uh, miscellaneous expense from general and the very first line item or the second one. Now, the only difference is that when you are doing miscellaneous expense from general, it doesn't go into any particular uh, subledgers. Like, for example, over here, you would see whether it goes into expense on client's account or any of those specific accounts. Whereas when you do from a miscellaneous account, it doesn't get assigned into any of them unless you go in and say expense on client's account needs to be added in over here. But honestly, doesn't make too much difference. But when you do a miscellaneous, it doesn't show up in your revenue as a different one. It just clumps with the remaining disbursements and shows as one line item. Well, since I'm on this page, I would also show what Mr. Tom asked for. So this particular box that says disallowed expense is super simple. When you click on it, it will allow you to add anything that is non-taxable. Let's say, for example, my pre-tax amount on this particular expense was $89. It'll only calculate the taxes on $89. It will not calculate the taxes on $10 because the $10 is a non-taxable. It's a disallowed expense. For example, it could be tip. When you make a tip at a restaurant, you don't. Let's say you have a bill saying, um, business week. out of which $180 and there was $20 that was disallowed expense, right? So something of this sort. Yes, I will certainly show you how to access them. I will show it in the end. Um, Thank you for asking. But Tom, I hope I'm clear regarding the disallowed expenses. Please let me know if you have any more questions, any of you in terms of disallowed. So very simple disallowed expense, something that is not taxable and it is raised in there. No more questions. I'll move on to raise an invoice. To both dockets and disbursements. Sometimes people would like to raise only disbursements, and you can still do that. You just download it. So when you download, this is how it looks. You have to disbursements on the second page. Shows very clearly the printing cost with the units and all. And in the last we have the detail on make the transfer, whatever is remaining. So once you make the transfer from trust fee general, you know what is remaining and you can collect that payment from the general account, from the client into your general account. So once you're done with the file, to move the money, you don't need to bring the money into trust. transfer is made. This is known as Form 9 if you are electronically transferring funds from custody general. And if you are from Ontario, this is something you would need to make sure to keep left with remaining payment to be made by the client. You send a little payment reminder to the client. So once you have the statement, you can share it with your client or you can send an email directly from uLawPractice reminding funds paid by the client comes into the general account because the file work is done. So you can get it into a trust account. So once you're done, okay. I'm so sorry. I have some audio issues today, so apologize. I think it should be better from next week. Apologize for this. Is it better now? I hope it's better. I'm just left with showing the reports